Still with us here on Markets Today Talk Back. We are looking at what happened in the day today, getting you the big stories. Our guests, Sanjeev Bhasin and Mitesh Thakkar, are with us. They've been answering the questions you send us our way. Well, we got through 3 of the top 5 stories and we move on to the 4th headline of the day. The Nifty Pharma gained 1.5%, courtesy a huge rally we saw in Sun Pharma. The stock ended 4% higher in trade. Aurobindo and Lupin were the other major movers. And this comes on the back of some positive commentary coming in on pricing coming in from that big player, Teva, and also some opinion from the brokerage CLSA calling for some earnings revival. My colleague Ekta Batra joins in with more. Ekta.
Well, a lot of news which came out from the pharmaceutical space today. What really helped sentiment seemed to be comments which came out from the Teva chief, who spoke at the JP Morgan conference. Remember, Teva is the largest manufacturer of generic drugs in the world, where the Teva chief said that they forecast stabilization of prices in 2019, and hence that would bode well possibly for all other generic companies when it comes to pricing pressure in the US. Separately, we had CLSA, which wrote on Indian Pharma. They expect Indian Pharma to build on earnings growth revival in FY19, specifically on Sun. They have a buy, but they've lowered their target price to 560. According to them, Sun has improving fundamentals in US, as well as they are number 1 in terms of an India rank. They like Sun for their differentiated pipeline. They expect Sun to reassess and take necessary steps to allay concerns when it came to all of the governance issues. Lastly, Dr. Reddy's was in focus on account of their SEZ unit in Vizag getting inspected by the US FDA. That's what sources told me. The company has no comment. It is a formulation facility and expected to have been a surprise inspection which began this week.
Okay, thank you very much for that summary, Ekta. That was the sector that did very well. And with that, we come to the 5th and the last headline today. The mutual fund industry saw weak inflows for the month of December, with a 21% drop in inflows into equity schemes. It comes to about 6,600 crores, which is half the inflows that the equity funds saw in October, and a far cry, of course, from the big numbers that we saw last year, indeed in many months over the last 2 years. Prashant, a quick analysis?
I mean, sobering data, Latha. So, 21% drop that we saw in the equity category month on month, so December over November, and this comes on the back of the 30% drop that we saw in November over the previous month. So the trend is very clear. The silver lining was the SIP number, the systematic investment plan flow, which number was 8,000 plus crores. This is higher than the month of what we saw in November. So, I mean, it's a bit strange that the active category is seen 6,600 crores. The passive category number is increased to 8,000 plus crores. So, top down, it seems like people with older folios, older investments are redeeming and taking some money out, but more money is going into the systematic plans. That is the interpretation. On the other one was ETFs. I mean, there was the CPSE ETF, the Central Public Sector Enterprises ETF, which was open for subscription, and we did see a very lumpy 10,000 crore plus going into that. But that is usually, for the period where the scheme is open, and it kind of fades away. We've seen this in previous months as well. Okay. In June of 2018, we saw 8,000 crores going into that ETF category, but it came down next to nothing. So, all in all, pretty sobering, Lazar.
Okay. Well, actually, even the fact that debt funds have seen such a huge outflow, I think they see every quarter end, September, they saw the outflow. Even that would kind of be hurting NBFCs because there won't be enough money to be put into CPs, perhaps. Well, we would have liked to take a question, but unfortunately, completely out of time. Sanjeev and Mitesh, thank you very much for joining us. But before we wrap up, we could also leave you with someone you would like to hear. We have Siddharth, Eicher Motors' Siddharth Lal, on the fact that Royal Enfield's numbers saw a steep fall both in November and even more in December. Here's his spin on how this slowdown may pan out. He thinks it's transitory.
The signals are that with a bit of correction behind us that we have, we're going to have, we're going to continue now on our growth journey. This is not the new normal of, let's say, negative growth, certainly not. But who knows? I mean, we're talking about the future, right? This is not something that I can predict with certainty. The only thing I can predict is where we are putting in our efforts and what are the signals we're getting. And those are all, by and large, in the right domain.